Guys, what is going on, and welcome to today's YouTube video. In today's video, we are going to do an educational trade recap on this ING long that I entered yesterday or the day before. I can't even remember. I think it was on Wednesday. And I want you guys to understand why I took this trade setup, why this is such a clean setup, and how you can enter setups like this very, very easily as well. This is one of the cleanest setups that I've seen in a while. I'm not out here to flex or anything with this setup. This is simply on educational purposes, and this is definitely a setup that is playing out over and over and over again, not only on ING, but also on other crypto pairs. So in today's video, we are going to talk about the setup, just to quickly show you guys the proof that I actually did take the setup over here, and also, of course, the proof that I actually shared this as a full signal with complete entry, exit, and stop loss. Now let's dive straight into it, because if I'm quickly just going to remove this long tool and we're going to start from scratch, the first thing that we see on ING is a huge uptrend. After this huge uptrend, we can see that ING starts ranging. Now, the most important part with ranges is that you have to be able to identify the range high and the range low. Now, a lot of people are asking me lately, Guru, how do you determine your range high and range low? Important is that you need 3 different pivots. You either need 2 pivots at the bottom of the range and 1 at the top of the range, or 2 pivots at the top of the range and 1 at the bottom of the range. In this case, we have 2 pivots at the bottom, right? These pivots need to touch the almost exact same price. And we have 1 pivot at the top. You can either decide to take this as your top pivot or this as your top pivot, okay? Now, important is with ranges is that you almost always have deviations of the range high and deviations of the range low. Over here, for example, we see a beautiful deviation of the range high, and the rule with range trading is after deviation of the range high, you should get a move towards the range low, which happened over here. After deviation of the range low, you should get a move towards, indeed, the range high. Now, this is where we saw a beautiful liquidity sweep beneath the range low. Okay, this was something that I've been watching over the past weeks on ING. I think I shared it on Twitter as well, that I was awaiting a liquidity sweep over here to look for longs. Now, after this liquidity sweep and this deviation of the range low, price made a push up, and we shifted structure over here. Now, important is with deviations, if you want to be able to trade them, you need a break of structure to confirm it, okay? Now, on a 2 hourly, you cannot really see this as a lower high, but if we move to the 1 hourly time frame, we can see that over here, we had a local downtrend leading towards a move of the range low, right? Lower highs and lower lows. Now, this is where you shift the structure, right? Because this was the lower high that brought you to this lower low, okay? Structure got shifted for the first time. After we shift the structure for the first time, we move back into the discount of this impulse towards the upside, right? Followed by another impulsive move to the upside, okay? Keep in mind, after a deviation of the range low, you should get a test of the range high. But important is, to get a test of the range high area, you need to reclaim the mid-range. And now this is where it gets interesting, right? Because often people are able to identify the range, and once the mid-range is reclaimed with a move like this, they simply start bidding the mid-range and target the range high. Now, in my experience, it's not that simple. Often, the first retest of the mid-range is not the real retest. Often you see a deviation of the mid-range, which we're also seeing over here, followed by a second reclaim of the mid-range. And if that happens with the shifted structure, then you are good to long the retest of the mid-range. Understand? So also over here, people longed this mid-range. Now, where do we think that those people have their stops? Exactly, they put their stop loss beneath this low, right? So over here, we see a fake breakout. Even more people are induced into opening long positions, and everyone is now putting their stops. If we quickly switch on the replay, everyone is having their stops, in this case beneath the mid-range, right? The liquidity is resting over here. Now that is why smart money pushes the price below the mid-range to start another deviation, because this is where they can fill their orders. because of that liquidity pool, but also because people see the price move below the mid-range again, and because of that, they start shorting the price towards the range low. Now they can use this short and sell pressure to absorb it in order to fill their own longs. Now, if this deviation is once again confirmed by a shift in structure to the upside, which we saw over here, right? Because we opened and closed candles above this high that brought us to this low, that's the moment where you can start looking for longs. And that is exactly what I did. Now, important is you want to look for longs around the mid-range, but also around the mid-range support after that reclaim and deviation, you need an inducement because we need that liquidity to be formed in order to fill those orders. Now, we had a beautiful inducement over here. Below that inducement, if we zoom in, we can see that we had this hour one order block. We can use this red candle or this red candle, right? Extend to the right. This is where you want to get your entry. Also, if we go from swing low to swing high, switch on the golden Fibonacci ratio. The golden Fibonacci ratio was exactly aligning with the exact same area. Easy confluences over here for our entry, for our stop. First take profit target is the range high. Now, important is with this reclaim, which was another very nice confluence that a lot of people underestimate in my opinion, is that the most important EMAs, so the 100 EMA, 200 EMA, and 200 moving average on a 1 hourly time frame were reclaimed and exactly aligning with our area of interest. On a 2 hourly time frame, reclaimed and exactly aligning with our area of interest. And on the 4 hourly time frame, the 100 EMA and the 200 moving average also reclaimed and exactly aligning with our mid-range. So there were a bunch of confluences to enter a long position over here, which is exactly what we did, okay? We had the structure in our favor. We had the liquidity in our favor. We had the drawn liquidity to the upside, because don't forget that this huge wick above the range high is a drawn liquidity, right? Because we know that wicks into liquidity pools often get filled at least for 50%. So over here, we also bounced beautifully from this bullish order block, right? So there was just so many confluences that were lining up and that were showing the bullish order flow and that were showing the way towards a test of the range high. So we simply set our limit. Like I said, exact signal was shared in our VIP channel, as you can see over here. Now, if you want to join it, make sure to join the link in the description where you can join our Discord for free. And as we can see, this is the wrong chart, obviously. This is really, really stupid of me. As we can see, our entry got hit to the cent accuracy. As we can see over here, if I'm quickly going to extend this a little bit more to the left, entry was exactly hit. We got a beautiful push first to the quarterly level of the range. Once again, you see, this is where we find the first time of resistance. After that, we push towards the range high. First take profit target got hit. Now our second take profit target is this high over here. And eventually I'm going to keep a 25% moonback as well to keep in case we push a lot higher. Because as you can see over here, I told the people in the VIP channel this morning, it is trying to hold above the range high over here. If it manages to hold above, it should send towards $19.13. But I want to keep 25% as a moonback because I do expect ING to potentially run a lot higher. If this range over here, after this impulsive move up, is a bullish reaccumulation range, okay, we should expect another impulsive move to the upside, okay? And we can see that in the past, ING has been moving up very impulsively. So if this is bullish reaccumulation and not distribution over here, and we hold above the range high, this should send a lot higher and this trade could turn into a monster trade. Now, I think this was quite an educational trade recap. I think it is important to be able to identify how to determine the ranges. I think it is important to identify the structure. I think it is important to identify the liquidity. And if you are able to identify ranges, structure, and liquidity, and you can find the right confluences for your entry point, I think you are well on your way of becoming a profitable trader. Now, if you guys do have any questions after watching today's YouTube video, make sure to let me know in the comments down below. Also, make sure to follow me on Twitter and join the free Discord. And make sure to like and subscribe. And I'll catch you guys on Monday's video. Ciao, ciao.